Good evening. Today is February 25th. And the last 2 days, Powell rally has completely reversed today. After testing 39.20 on the open, we then broke below 3900, and that's when the sell-off accelerated. And we sold off for the rest of the day. The market tried to rally around 1 p.m., and we did have a 50-point move up, but that didn't stick, and we sold off and closed almost at the low of the day around 38.30, down 90 points, and now we're down a few more points after hours. Nasdaq was down almost 500 points, over 3.5%. Its seventh loss in its last 8 days, and it posted the biggest decline since October, and Nasdaq is now down for the year. Tesla was down 8% today as SEC is set to investigate Musk for his tweets on Dogecoin. I've talked about it many times, and SEC is trying to do something about it finally, but it's not clear if they can because it's not their jurisdiction, cryptocurrency. And of course, Elon is trolling SEC again. He replied to SEC, "I hope they do. It will be awesome." Nothing scares him. And nothing scares the MicroStrategy CEO, Michael Saylor, either, who keeps pumping Bitcoin and his own stock. After raising $1 billion just last week in convertibles, he talks about raising even more debt to buy Bitcoin and says that it could be 100 trillion market cap. And Bitcoin, surprisingly to me, today was mostly unchanged. It didn't move much, unlike the markets, and was trading around the Soji level, 50,000. And GameStop stock was in the news again, going crazy. It was up 200 after hours last night and was today as high as 180 during the regular trading session and is now trading around $100. And I wonder what Melvin Capital is doing, as allegedly they have reshorted the stock right before that second squeeze. And so the story behind the market sell-off today, the official story, is that investors finally started to worry about bond yields, as bonds sold off yet again today and had a mini flash crash from 160 to 157 handle in 5 minutes, and then we're back to 159 again.
I see it only got to 150, 850. But all right, I got it. Anyway, it had a nice decline of 2 points. Finally, they're beginning to second guess the two post-stimulus people who seem to, regardless of the normal fears that a monetary authority has that inflation will come, they seem to feel that just buying bonds from the Fed directly or buying bonds from dealers, and that as long as they have more money, they'll do it regardless of inflation. So that was definitely what happened finally. The bonds got to the 159 handle. And they're at a 1-year low. And that was the story of the day. What else did you see as a story?
Nothing really. And of course, everybody now wants to know if this correction is the beginning of a sell-off like we had in March, or some sort of deeper 10-20% correction. What say you, Victor?
I say tomorrow will be up, and that the key to the game today was that it wasn't cricket. The top feeders lost money at the expense of the bottom feeders. You had GameStop going from 50 to 200, and the
Right.
top, the little guy was making money, and And apparently the big guys who are in technology, they're accustomed to making money. Everything is rosy for them. There's one woke thing after another that's helpful to them. And they're actually down for the year. And S&P is up about 2% for the year. And there are a bunch of useful idiots that believe that when the S&P is down in the first X months, that it's bearish for the rest of the year, because what they call a pothole correlation that completely makes the ideas worthless. We did have, thanks to Doc Castaldo, he reported the actual results of the contest. And Mr. Tony Corso won it. And the gist was, he looked at the Russell 3000, which are the 3,000 biggest stocks, and he followed it for 10 years. And each quarter he divided the 3,000 universe into 5 quintiles, with the bottom 2 quintiles, the ones that were up the most, they performed about 3 or 4% higher than the worst 2 quintiles. So that study had no survival bias. It was a very, very scientific, very adept. I'm used to seeing all the technical analysis studies that are completely retrospective and have a lot of survival bias, but this one corrected for all that. It corrected for it in a very simple way. I was very impressed.
Did you say it was done for the last 10 years?
Yeah.
Is that a concern? Because the last 10 years was, I guess people would say it was a different situation. We didn't have any meaningful corrections like 2000 bubble or 2008 sell-off.
We're not going to have another period. Everything's very woke. Here's what Doc says. There are 5 portfolios. Q1 contains the best performer and Q5 is the worst. Turnover of the portfolios is 24% a year. The best performing stocks are the bottom, the best performing quintiles. The worst performing stocks continue to do the worst. The annual return of the best performing stocks over this period has been of the order of 10%, and the annual return of the worst performing quintiles has been of the order of 5%. What this suggests is that you should avoid the laggards while holding all the remaining Russell 3000 stocks. We could call this an anti-laggard strategy. Mr. Corso also did a study of whether within an industry groups you should buy the best performers within an industry group. And here are the conclusions. It's a good idea to avoid stocks that have had a very poor performance compared to stocks as a whole over the last 12 months. For those who like to buy stocks that are down, hoping for recovery, it would be okay to buy stocks that have performing poorly relative to their sector. Presumably, these should be stocks in average performing sectors. I guess in New York, there's a lot of talk about Cuomo. Usually the most strident and most arrogant um, people are the ones they feel they're above the law and everything. And previously we had this poor Mr. King who said that the governor called him up 5 times, told him he was going to ruin him, that he hadn't seen his wrath yet. And then a former employee said it was sort of the part of the culture that the governor would take liberties with all his employees. And apparently she claims that he asked her to play some strip poker, and of course all the employees, they get their salaries paid, and that's one of the problems with a few million government employees. No matter how much they lock down, no matter how much they disregard the normal day-to-day things that give people happiness, they keep their jobs. They don't have to worry about being fired. But I think, we sort of had some chinks in the armor of the woke today. And I think that in addition to the fact that the top feeders lost to the bottom feeders, that the fact that Governor Cuomo is an icon of the progressives, is now under fire. That's non-woke. So I think that was a bearish undertone. The Post had a million things that were non-woke today. I noticed one very good news, that Zillow has come up with an interesting way of making money. When you list your house and they make an estimate based upon comparable values in the neighborhood with the number of square feet, they make an estimate. They made an estimate for my house in New York that was about 25% higher than the market. But now what they're saying, that not only will they make an estimate, they will buy the property at their price, at their estimated price.
Really? I
Yes,
didn't hear that. Wow.
and I think it's a very sanguine method of making money. Of course, the real estate is going through the roof right now. Everybody, more transactions. Lots of money is made in real estate. Probably the great, aside from all the tech companies that got the benefit of going public and being fostered by companies in vogue. One always wonders when there's a crash, how you can buy some real estate. The government generally sells all that real estate to fellow travelers. I've tried over 50 years to buy to buy some real estate from the government, then no, it only goes to people who are connected in some way. But here's a way for a company that has a niche. They specialize in what they do. I think they're going to be very successful. They say that after they make an estimate and agree to a buy, they'll just send observer person to an appraiser to just make sure that the house is in order. They'll fix the house up if it's necessary, and then they'll try to sell it. I think it's a great business model. So there's a lot of talk about the fact that the migrants are being put into the cages, the same cages that they complained about.
Right.
That the Republicans also that they're still killing all the restaurants. They're
Meanwhile, in Florida, I can't make a reservation. I have to plan a week in advance to get into any nice restaurant, at least a week.
What's your favorite restaurant in Florida?
I really don't have a favorite. I prefer variety. Sushi, Italian, anything good, really. You have mentioned today we had a red day. Both stocks and bonds were down, so that should be bullish for the markets.
Well, that's just an expectation, or
Right.
maybe, as I say, a little more than it's better for the next day than all the others. We have the restaurants are only allowed to be 25% filled up in New York, and they can hardly make money when they're 100% filled up. So how are they going to make money when there's 25%? And then this Mariana Tandon, who they're trying to get to be the head of the House Budget Committee. She is savage. She is savage Sanders. She is savage all the Republicans. It's amazing that they would, in your face. I mean, what could be more disunity than somebody who has been stridently against you? That President Biden has been so opposite in his call for unity. Everything he's done is disunity. I noticed that the person who's most likely to be president in 2024 is Kamala Harris. She's more likely than President Biden, and more likely than, and he's about 10 percentage points more likely than Trump. Trump is going to talk. It was an amazing day today, really. It broke the Soji level of 50 was definitely in play. And whenever it went below 50, it quickly went up to 70, went up 20 points from the Soji level. Then it was above. It played ACDC today. When it was below it went above, and when it was above, it went down. As I recall that on a day, on the last day of the month, usually it opens up, and it went down. It went down from 405, from 5 after 4, it went down almost a 0.5%. So we start off with the market being down 0.5% from the 38.30 level at 38.22. I see that right on the front page of the post, the person accusing says government governor kissed me, and all the, well, you might think that's de rigueur or that unimportant, but when an icon, a person who was stridently against everything Republican, who blamed, he tried to blame all of his nursing home scandal on Trump. As an athlete, one of the most worrisome and unpleasant things is when your opponent has mentored you, then you beat him, and then he badmouths you and he says that everything you did is wrong. I think people have a visceral feeling when the President Biden said that there were no vaccines before I came. As you know, there were no vaccines. Well, not only were there vaccines, but 3 weeks before the election, they had all the results on the vaccines, and they held them back to make sure that they wouldn't give the Republicans another leg to stand on. But it's rather loathsome when someone tries to take credit for something that the other side did. I think that was affecting them, but they seem to have adjusted. They've taught the small guy the bottom feed is a lesson in Bitcoin. GameStop was up to 250 and now it's back down to 100. Apparently, the person who testified for GameStop, he must have given a lot of the small guys hope. The small guys, I agree with Munger on one thing. He's wrong about everything, and the sage and Munger, they're the perfect useful idiots. If you do the opposite of everything that they say, you'll make a lot of superior returns. But I agree with him that the small investors, he says, Munger says they're crazy. Well, yeah, they're crazy because they're going against the infrastructure. They're going against the top feeders. Eventually they will lose, and a lot of the 6 million new investors who have tried to buy the FANG stocks have egg on their face. But tomorrow's another day. I'll be taking a long position from the 38.22 level. Should be much more normal, should be much more woke, much more bullish tomorrow. As to what's going to happen in the bonds, hopefully the two stimuli people will say something that they're worried about inflation. And that will be the key to turn everything around. In the meanwhile, bonds have talk about Nasdaq going down 7 out of 8 days. Bonds have set a 20-day low about 10 out of the last 11 days. They started at 180, now they're down to 159. You know, sometimes I think that the Fed only cares about stocks. They don't even know about the bond market. They're still going with the fact that no matter how much money they spend, it won't cause inflation. But when stocks go down, then they notice it, because that can lose some votes. So that's why I think these red days are actually quite bullish. And the fact that they dare to hit the FANG stocks, and the greatest supporters of the president, which for the last 10 years, every year have beaten the S&P. The fact that things are topsy-turvy like that anyway, I think the Fed will notice that stocks are down. They're still up about 2%, but of course they're more concerned about their major funders. And I imagine that the big techs probably, they say that 95% of the money given to the campaigns from the government employees is for the Democrats. I imagine from the big techs, they only report the contributions to the campaigns, and it's still about 90 to 95%. But if you take all the money that the Soroses and the Googles and the Facebooks, all those, there's not one among them who favors the Republicans.
Right.
They on Sunday, the president, the former president, is going to talk. He probably still has a vindictive nature, and I mean, he's going to criticize all the Republicans who weren't loyal to him, going to hint that he wants to run again. That could be very bullish, because his chances of winning are very, very low. He's created too many enemies. His persona is too disliked by too many people. So all those things are in play tomorrow. If GameStop goes down, if the Nasdaq bubbles up, I think sometime in the morning. And we have the Nikkei was very weak today. Very weak. It closed at 29,600. It was 400 points below the 30,000. It got up to 33,000. It was sort of stogied, I should say, Professor Biden around the constructional number of 30,000. But the Japanese don't like to lose faith. And they'll be holding the Olympics. Of course, it would be too much losing face. And the same way, if it goes below, if it stays below 30,000, they will lose face. I predict that by the first day of the month, March 1st, we should see a close above 30,000 in the Nikkei. All right, that's enough for the predictions and the regularities today.
And also, before we go, I put up the chart that we talked about before about Nasdaq versus S&P 500. And if you look at it, that QQQ has outperformed SPY dramatically since 2013 by a large margin.
Yeah, and people say, well, look what happened in 2000, but we have a different, the cycles have changed again. we don't have,
Mhm.
we don't have, of course, from 2000, there were a few bad years for Nasdaq, but in the previous years, they were like the Nikkei before it got to 30,000. They were showing 50% gains each year. But anyway, the cycles have changed. The technology stocks are all woke. All the contributions are to the current administration, and they've learned how to make money when all the small businesses are going broke. And so we're in a completely different habitat than we were in 2000. And the fact that NASDAQ has done um, so much better in each of the last 10 years, I think, is because there's a new game in town. Of course, the one negative is that as interest rates go up, the discounted value of growth stocks becomes much lower. In other words, if you're growing by 20-30% a year, which is the return on capital of all the big tech, if you have to discount that at 1%, then 20-30% grows to infinity. But when you start discounting it by 2.5%, you have to worry about it. But I think that's very insignificant in the realm of things. Okay, see you tomorrow.